Thank you all for finding time in your busy day to join us. My name is Alan Pickering, and I've been honoured to be the warm-up person for this event, and I will also bring it to a close in an hour, so I'm something of a human bookmark. But never could there be a more appropriate time to consider the issues on today's agenda. As we move away from a pandemic, people are resetting their lives, resetting their work-life balance, and employers are resetting their approach to employment and employee remuneration. Not only are people resetting their approach to life, many of them are making life-changing decisions. During the pandemic, we've seen a much more flexible approach to working and the choice of workplace. Many people now have decided that the best way of sorting out their work-life balance is to stop working and enjoy life, which together with the after effects of Brexit means that there is a very tight labour market, which means that employers who want to leverage their buying power in that labour market will have to concentrate on what people can do and what they can't do, rather than what they can't do. And this, to me, is the most effective way of improving diversity, equality, and inclusivity in the workplace. If we have a completely open mind to who we recruit, we can then make sure that those people will progress up the workplace hierarchy as far as their aptitude and ability provides for. No longer will there be glass ceilings, and hopefully no longer will there be a need for top-down compartmentalization to make sure that we have diversity at every aspect within the business world, at the bottom and at the top, whether the top is at the top of a corporation or the top of a pension scheme in the form of a trustee. Nobody should face any barrier to advancement. Only in that way can they maximize the contribution that they make to society, but employers will be able to get full value from the talents of the people that they employ. Well, I don't want to personalize this. I remember that when I first went to get a job on the railway, I was told that because of my visual impairment, I could never be an engine driver. I wasn't applying for a job as an engine driver, but I had the same eyesight test as someone who wanted to be an engine driver. They concentrated on what I couldn't do rather than what I could do. However, unbeknown to them at that stage, my father worked on the railway, and that was an opener, because if your father worked on the railway, you could work on the railway. These days, businesses now try to make sure that the recruitment process is blind to baggage. We try to make sure that you don't approach the interview with a closed mind based on what you're expecting to see. So no longer is a prerequisite to becoming an actuary having a parent who is an actuary. Those who are interviewing you should not be influenced by your education, your social background, your gender, or any other characteristic. Having adopted such a diverse approach to employment, we then need to adopt a similarly targeted, inclusive approach to remuneration. And employers will need to get the balance right between pay and benefits. And within the benefit package, we've really got to take a step back and see what will float the boat of particular groups of people. And we all need a number of building blocks. Sadly, and I do say sadly, in Britain, it's regarded that the default building block is a pension scheme. whilst I would not wish to undermine the success of auto-enrolment, what people who are excluded from the financial services sector really need is a bank account. And Standard Life research showed that a significant proportion of our fellow citizens don't have a bank account. That really is going to exclude them from many value for money opportunities. They may well want protection products if they have those who are dependent on them. They'll need medium-term savings, and they will also then need a product which will see them through later life. Now, all of us might need those building blocks, but we'll need them in different proportions and at different stages as we go along life's way. And I think that the exciting prospect of this joint research project between Standard Life and the OECD should ensure that we adopt a much more targeted approach to meeting people's needs. And sometimes wants and needs might be different. We may need to educate people to realise that what they want isn't really what they need, and to make sure that characteristics don't result in a double whammy. So if a poor person puts all their assets under the bed, they're going to stay poor forever. Whereas if they deploy those assets more productively, then they may be able to climb the hierarchy of financial security. So we have to have a much more bottom-up approach to putting people together with what they really need from the employee benefit program. And I think it should be an employee benefit program because people trust their employers, and therefore it is in that environment of trust that we can help people plan for their financial future. Let's all work together and try and ensure that throughout life we can fulfill our full potential in terms of climbing the industrial hierarchy, providing diversity, equality and inclusivity all the way up. And as we progress up that ladder, we will gather together a range of financial products that meet our needs based on our particular characteristics, but to do so within a collective environment to give us value for money. And I hope that Standard Life and OECD, with their combined research capabilities, will help us provide that package. In so doing, improve member outcomes and indeed improve the rewards that employers get for their employee benefit program. If the workforce isn't engaged even to the level where they appreciate what you're giving them, then you're not getting bang for your buck. I mentioned the cooperation between Standard Life and OECD, so it gives me great pleasure now to pass the baton or the microphone to Sangeeta on my right from Standard Life. Sangeeta.
Thank you, Alan. And good afternoon and a warm welcome to you all. Today, we're discussing our new thought leadership program, Thinking Forward, and Alan has just set out a great problem challenge that we're going to discuss in the next 50 minutes or so. So Standard Life, as part of Phoenix Group, has a brand promise to help people live a life full of possibilities. The brand's ambition is to be a leader in the markets we operate by putting customers at the heart of everything we do. Among other things, this means being a thought leader, pushing debate on behalf of you, our clients, your customers and advisors on the things that matter most, providing insightful views and making policy recommendations, and essentially helping the industry to do better on behalf of our customers. So what's on their minds? When we relaunched the brand in October last year, we were told three things. Many of you from our clients confirmed that they wanted to work for a partner with a strong social purpose. We were told that engagement is a top concern, and increasingly how to cater for the diverse needs of your workforce. There was a desire also to support people more broadly, not just with pensions. Second, many agreed with our assessment that there was a worrying lack of innovation in how the industry supports people when they get older. The challenge, the trade-off being getting certainty of income versus flexibility and not running out of money. And third, service, a common theme, an increasing expectation for simplicity, ease, instant access, and customization. So to your point, Alan, the needs of customers are getting increasingly more diverse. So how do we go and start to solve for this? If I go back to my previous roles before coming to Standard Life, at Schroders, I spent 4 years talking about the challenges of DC. I spent time with employers, advisors, policymakers, and regulators around the world, over in Asia, Hong Kong, Singapore, China, for example, in Europe, in UK, Canada, the US, and in South America. And my acid test whenever I went to a country was the taxi journey from the airport and the hotel staff. I used to ask them about their pension and what they thought of it. And the challenges I heard were essentially the same as what we hear today. People told me, that they didn't know how much to save. They didn't have enough money. They didn't know what to invest in. And often I heard about the competing priorities: property purchase, education, paying off debt, healthcare, and family responsibilities. And for those in retirement, it was, when can I retire and how much money do I need? So of course, nuances exist, and these differences absolutely have to be understood. But at a very basic level, the challenges are much the same. So what did this teach me? For sure that every country can learn from another. The more we can work together, understand the lessons learned, the more we can sharpen our focus on the areas that matter and drive new thinking and ultimately innovation. We want to apply a global lens to these challenges. And to help us in our ambition today, as Alan's just mentioned, we're announcing a new relationship with the OECD. We're entering into a 3-year joint research initiative with them. And the 2 areas that we're going to focus on are diversity, equity and inclusion, and retirement income. With the DEI research, the OECD will progress some of the work that we did last year at Standard Life when we surveyed 5,000 people in the market. We found some interesting themes, but we wanted to validate this research against others that exist. We'll be looking more closely at factors such as age, gender, ethnicity, culture, and socioeconomic background. And the key purpose is to understand the differences in want, need, behavior, and attitudes. 44% of our clients are aged over 50, and this age group is being presented with an increasing number of choices and decisions to make. As part of the retirement income research, the OECD will examine the challenges in achieving financial security. All this with consideration to the varying needs that people have in retirement. We'll be looking at housing as an asset class within the solution design and looking at different ways we can pool and reduce longevity risk, for example, collective DC. Key to this success is, of course, having your input. In this way, we can shape the nature of the research, and over the next 3 years, we'll be sharing the findings with you. We're super excited to embark on this new initiative with the OECD. The OECD works with hundreds of countries around their world, and their reputation is unrivaled. By working collaboratively with them, we can not only tackle the challenges facing the UK saver, but also help many more across the world. And now to tell us more about the OECD, I will hand over to Pablo Antolin, Head of the Private Pensions Unit and Principal Economist at the OECD. Over to you, Pablo.
Thank you. Thank you very much, Sangeeta, and thank you very much, all of you, for joining us today and allow us to explain this joint research initiative and also what we do and what we are at the OECD. The key idea of the OECD is to provide a forum for people, in particular government, policymakers, regulators and supervisors, to share experiences and exchange ideas with the ultimate goal of providing policy guidelines. This is always the ultimate goal of the OECD, to provide policy guidelines. What is the OECD? Well, you all might have heard about the OECD. It's formed of 38 countries. And the way we are organized is like ministries in different governments, and we call them directorates. And in each directorate, we have committees and working parties. And the people that sit in those committees and working parties are representatives from governments, policymakers, regulators, and supervisors. And this is the forum in which we share experiences and exchange ideas. So the OECD provides a forum for government, policymakers, regulators, and also other stakeholders to share this experience and to find common problems regarding retirement provision in the area of pensions. Because I and my colleagues here that will be speaking, we work in the area of pensions. We work for, as I say, committees. We work in particular for the Committee on Insurance and Private Pensions, and we have a working party on private pensions. So we provide this forum for regulators and policymakers, insurance and pension regulators and supervisors to share experiences. We also collect data and analyze the data. Without data, it's difficult to understand the problems and how things fit. And as I say, the ultimate goal of all of this is to provide policy options to improve people's retirement outcomes. Obviously, we disseminate all this work and use all this work to, as I say, to provide policy guidelines to policymakers and regulators and supervisors. We have, and some of you might have heard, we disseminate through several publications. We have the Pension at a Glance, we have the Pensions Outlook, and we also have Pension Marketing Focus. Pension Marketing Focus collect and provides most of the data on pension system across OECD countries, but because the collaboration is also with the International Organization of Pension Supervisors and the World Bank, this covers more or around 90 countries in the world, not just the 38 countries of the OECD. So what do we do at the Working Party on Private Pension and our committee? Well, we have 5 activities, and again, the first one is to collect and disseminate data. Then we do analytical work to see of those experiences that we have been sharing, what works, what doesn't work, what kind of trade-offs involves, and we provide policy guidelines. And we provide these policy guidelines developing regulatory principles and guidelines based on the best international practices. And here I have today one that was approved just last week, the OECD recommendation for the good design of DC pension plans that some of you might have heard in previous version as called as the roadmap. Now it's an OECD main recommendation. And here we have 10 main messages for policymakers. And the important thing for us is, well, we have these guidelines, we have this analysis, and how do we implement this? We have these committees, these working parties where we have regulators, pensions, and insurance and regulators and supervisors, but for the implementation and to discuss with them all the issues related to pensions, we need to bring together other stakeholders. So we like to have, or we think it's important to have a comprehensive approach. And this is where the collaboration with Standard & Life, we see it working, bringing one of the views and approaches of the different challenges and the different issues that one of the key stakeholders in an important pension market can provide us, and at the same time, you and them bringing the issues related to the implementation of these guidelines and recommendations we come up at the OECD. Implementation, as you probably know, it's almost everything. You can have great ideas, but if we don't know how to implement it, or we have not considered how to implement it, well, they might not work. And this is part of our work, and this is where this relationship is important for us, and also with any other stakeholders like all of you that are present here today. And in this particular guidelines on the good design of DC pension plans, we have, of the 10 main messages, we have 2 that bring the research that we will be collaborating in this joint research initiative. Number 2 talks about making sure that defined contribution systems are inclusive as possible. taking into account diversity and covering the entire population if it's possible. And this is one of the key research initiatives that we are going to be working on in this relationship or in this collaboration. And then we have messages linked to longevity risk and products that will allow us to monitor and manage longevity risk. And this is the area of longevity risk. And some of the questions that you might ask, my colleagues, Jessica Mosher will address them. So I leave it here and I pass the baton, as it was mentioned before, to Stephanie, that is going to talk about the work on inclusiveness and diversity that we have been doing at the OECD and we are planning to develop further in this research initiative.
Thank you very much, Pablo. Good afternoon. So I have a couple of slides just to make some of the points even stronger, if it's possible. So yeah, we are very happy that Standard Life is supporting our work in this area. And here we are embarking in a new project to understand the attitudes and views of underserved populations with a view to make retirement saving systems more inclusive. And we are not starting this work from scratch because actually the OECD has been working on these issues of inclusiveness for more than 10 years now. We looked at coverage numbers, we looked at approaches to increasing participation, and more recently we looked at specific subgroups of the population such as workers in non-standard forms of work, but also looking at gender differences. And why is this an important issue, inclusiveness? Well, it's because in many OECD countries, retirement savings systems are not fully inclusive. There are a number of criteria that make people, some categories of workers, less or fewer or more restricted access to retirement savings arrangements. For example, the self-employed in many OECD countries participate much less in retirement savings arrangements than employees do, and this is the case in particular in the United Kingdom. Another important criteria is whether you are working part-time or full-time. And even though here you see one example is Germany, where the number of hours you work doesn't really impact whether you are covered or not by a pension plan. In Ireland and the US, you see that the difference can be quite massive between full-time and part-time employees. Another criteria that is very important is income. Usually in most countries, actually, the low and the middle income earners are those who participate less in retirement savings arrangements. Other labor market factors include education, occupation, the size of the employer, and whether people are unionized or not. But beyond those labor market factors, there are also demographic factors, such as age. And in many OECD countries, the peak for the participation is around the ages of 40 to 50. And sometimes this is too late if you start saving at this age, because it's important to have really long-term savings for your retirement. Other demographic characteristics include gender. In many countries, women participate less in retirement savings arrangements than men. And you can see at the top graph that, for example, in Belgium, the difference between the two, between men and women, can be quite large. Nationality is also another factor that plays a role. You see that in Ireland and Germany, nationals are much more likely to be covered by a retirement savings plan than non-nationals. And finally, ethnicity is also playing a role. And here we have some data for the UK showing that it's better to be white than to be an Asian when with respect to being covered by a retirement savings plan. So based on all the analysis we already did, we come up with, or the OECD come up with policy guidance to make retirement savings systems more inclusive. So here I included a couple of those policy guidance. For example, having mandatory or automatic enrollment is the best way to have higher levels of participation and also more uniformly distributed across different categories of workers. Financial incentives to encourage people to join and to participate in those plans is also important, but And not any type of incentive is equal. Some people will react more to tax incentives, while some people will react better to non-tax financial incentives, such as matching contributions or subsidies. Simplicity is key. I think we all agree with that. Having simple rules, default options, automatic mechanisms to make sure that things are as easy as possible for people to join. Eligibility criteria can do quite a lot of harm based on salary, working hours, length of employment, because they exclude from participation people from the start. So they cannot join a pension plan in their workplace. And in the same vein, vesting periods should be minimized, because then it allows people to build entitlements from the beginning of their working relationship. Likewise, portability is quite important, because we have a more mobile workforce, so it's important that you don't have leakages when people shift employment. And we have other guidance, but basically all this work so far has focused on the implications of different individuals' work characteristics on their ability and capacity to save. But we also know that it's important to take into account the individual views, attitudes, and expectations towards retirement. For example, when we did the work on gender differences, we found that behavioral and cultural drivers and societal expectations were driving partially the gender pension gap. So we want to broaden this analysis beyond gender, because we saw from the graphs that participation gaps are not only between men and women, they are much more broader than that. And this is where the cooperation, the joint research initiative with Standard Life is coming in. We want to analyze the preferences and attitudes towards retirement across different socioeconomic characteristics. So we look at gender again, but we also want to look at generations, income, ethnicity, religion, language, and other things. And we are very grateful for Standard Life to share with us their data from their consumer attitude survey. So we will use that, and it's very important to have access to these micro data to be able to do this kind of analysis and understanding better the views and attitudes of different people. And once we have this better understanding of what are the preferences and views and expectations of people from different backgrounds, we want to assess how this can help us to improve the design of retirement savings arrangements for those underserved populations. So we are very excited about this cooperation, and we are looking forward to have your inputs as well as part of the process. Thank you, and over to you, Gail.
Yeah, I think I'm taking the baton. So yeah, that's so fascinating. I'm just going to cover 3 things in my short talk, really to give a perspective of what I'm seeing in workplace in terms of the problems we need to solve, why I'm excited about the partnership with OECD, but also a little bit, we're not standing still, and how we're facing into some of the issues within workplace, within Standard Life. So firstly, what are the key problems I see from a workplace perspective? So I think for me, engagement is key. So auto-enrollment's done a fantastic job of dealing with inertia, but we know that people are not doing enough planning and are not saving enough. So in our Bringing Retirement into Focus survey, it showed that 73% of people are doing little or no planning for retirement. And that's despite the fact that we know that planning increases confidence. And actually women and Generation X are amongst the least likely to be doing any planning. And actually we have a recent statistic that 2 out of 5 people in the UK are not confident that they'll have enough money in retirement. So for me, engagement is key, and engagement needs to be personal. And that means that we need to embrace all the wide spectrum of diversity to engage people on an individual basis. I think the next area is we need to make retirement more inclusive, and we need better support and solutions for retirement. So I think I said auto-enrollments helped mitigate inertia in the accumulation phase, but in retirement, savers find themselves navigating a complex environment where their decisions can have a significant impact on their future. So pensions freedoms have delivered flexibility, but with longer life expectancies and shortfalls in pension savings, we had some recent research with the Social Market Foundation that showed an average of 240,000 shortfall. That's a horrific statistic. So it's clear that we need to do more as an industry to make retirement easier, simpler, for everybody, and we need to innovate in this space. And that's in a few ways. We need to look at how do we help people prepare? So can we push guidance further? What more innovative products can we bring as an industry? And then also looking at other sources of wealth, and that might be housing. So about 67% of the UK's 5 trillion wealth is held by the over 55s. That is absolutely an area we're going to have to look at if we want to provide people with sustainable retirement. So next, I wanted to talk about why I'm excited about the partnership with the OECD. Now, before coming to run the workplace business in Standard Life, I was the CEO of our German and Austrian business. And while I was there, I was struck by the similarities and the challenges that we faced in the UK and Germany. So both of us have an aging population. We have an increasing age of retirement, decreasing levels of state support, alongside concerns around funding state retirement provision, intergenerational tensions. And I actually saw the same concerns around the right support and having adequate income in retirement. And I was also struck by the similarities between customers. So I spent a lot of time talking to my UK colleagues who just couldn't understand the German preference for guaranteed products and the high levels of savings that are held in cash in Germany. To them, it seemed illogical. And whilst there are undoubtedly some specific historic and socioeconomic issues in Germany, it's easy to forget that in the UK, our current solutions have been shaped more by regulation and economic factors. You know, it wasn't customers within the UK who asked to get a defined income in retirement replaced by DC pots and the responsibility to plan their own retirement. So that desire for certainty is common amongst many customers. So my experience in Germany taught me that challenges are more common than we think, and actually innovative ideas could be found outside the UK. So I'm really excited about the OECD partnership and how we can use it to turbocharge some of the work that is already underway in Standard Life. So just briefly before I finish, how are we facing into the challenges within Standard Life? So the key to engagement is to understand that everyone is different, and that's why diversity, equity, and inclusion is so important, because to engage, it needs to be personal and relevant. And a study by Forbes showed that 72% of consumers only engage with personalised messaging, and 84% said that being treated like a person and not a number is really important. So at Standard Life, we start with data. We use needs-based segmentation model that pulls in internal and external data. We use that to plan communication, and we actually share that with our clients and advisors to help us jointly define the right communication strategies. We use a multi-channel approach, so that means we can talk to people through our digital mediums, our dashboard, our mobile app. People can fully transact on that. It's a frictionless experience with fingerprint access to our mobile app. We use events. We also have helpful planning tools that will cover all life stages. And then finally, we also look at wider financial wellness. And the reason that we look at wider financial wellness is that we believe that to get the permission to talk to people about their long-term savings, then we need to be able to help them with their shorter-term financial problems. And that's why we offer a range of tools, whether that be our Money Hub financial planning tool, Workplace ISA, or Money Hub, which is our home buying coaching app. So all of these things help build confidence and competence within our members. So the partnership with the OECD will help us build out that diversity, equity, and inclusion data that we can then feed into driving our strategy of personalisation and of relevance. And so I'm really excited to see how the partnership will help us see solutions from across Europe. So I've shared some of my views, but actually key to the success of this joint research initiative is how we bring insights from you. It's a collegiate programme of research, so we're really keen to hear how your input and questions, and that will help us shape what we do next. So we'll continue to share our findings with you, and our next event will be in late April, where the focus will be on financial wellness and dashboards, and we'll be in touch shortly to let you know how you can pass your views to us and also details of the next event. So with that, I think it's my job to pass on the baton to Chris.
So I've now got the baton. Thank you very much. And before I go into question and answer session, perhaps just a few personal reflections on what I've heard. For those who don't know, I've spent 40 years managing in-house pension and benefit schemes, so I've been at the coalface of some of this. And I absolutely wholeheartedly agree with the comments around simplicity. We have developed, if I can be a bit local and speak specifically about pensions, we have developed a massively overcomplicated system. I have spent too much of my working career with people saying, just explain it to me like I'm a 6-year-old. We don't need all this complexity. Engagement is a huge thing. People really need to understand the value of what they're being offered by employers. I do think sometimes this is a bit of a chicken and egg scenario, in that should engagement come first or should inclusivity come first? Because I don't think you can build inclusivity without really understanding what the people want. So you have to go through some form of engagement. And I think the communication really needs to be simple and straightforward. We need to use the language that people use. We should not expect them to have the language that we use as specialists, forced on them. But finally as well, I think we do need to face up to the reality of some of these things, in that there is an affordability issue that we do need to go through. And unfortunately, because we have that affordability issue, and some people in the real world living from pay packet to pay packet and workday loans, somehow we need to find a way of bringing them into the fold as well, and just not leaving them to one side, but only if it's right and proper that we bring them into the fold, because there is the fallback of the state system that they should always have. So with my little soapbox moment finished, if I can move on to a question, firstly for Emma, if I can. Emma, what feedback are you getting at the moment from your clients and consultants? So Emma, your thoughts, please.
So I don't think you'll be surprised to hear, Chris, that it's very much along the theme of what we've been talking about today. And the reason for that is that actually one of the reasons we are doing what we're doing, one of the key reasons, is because we have been listening to what consultants and our clients and our customers have been telling us. So when I joined Standard Life back in July of last year, one of the first things I did was I went out and I spoke to as many consultants and clients as I possibly could in the first couple of months, because I really wanted to hear their feedback. And I said to them, if I gave you a magic wand, what would Standard Life be focusing on? And what I consistently heard was 3 things. And the first one was that social purpose and indeed social impact really matters. It matters to consultants, it matters to our clients, it matters to their members, and it really matters to us at the Standard Life and as part of the Phoenix Group. The second thing they said was very in line with what you were just saying, Chris, is that in the UK, we need to innovate much harder and much further around engagement, but particularly in a way that understands, supports and enables diversity, equity and inclusion, so that we can get those messages right, and they will be different for different people. And then the third thing that I heard very loud and clear was, again, in the UK market, we need to do much more to innovate around retirement solutions if we are to serve our customers and indeed wider society well. So very much in line with what we've been talking about today.
Excellent. Thank you, Emma. A question for Jessica, if I may, but also Alan, if I could pass this on to you when Jessica's finished for your thoughts. So Jessica, this year we will mark 10 years of auto-enrolment in the UK. So the success of that is largely based on taking advantage of apathy. We've defaulted people, removing their need for decision making, and essentially we've taken a one-size-fits-all approach. With this in mind, does it mean that we should perhaps have a default for post-retirement as well?
I think it's a simplistic argument to say, because it's worked so well in savings, that one way to overcome the lack of engagement at retirement is to have a default. That's kind of an easy answer, right? But while we can probably objectively say that it's good for most people to save a bit more for their retirement, once we get to a retirement, financial needs differ a lot across different groups of the population, and we can't have a one-size-fits-all solution for that. We can consider, for example, low-income people will be more reliant on the public pension, whereas their private savings is probably more of a complement. So probably need a bit more flexibility with that. Whereas middle-income people will probably be relying more on their private savings, and then we can probably think more about longevity solutions for that. So that, I think, in addition, the impact of getting this drawdown solution wrong is much larger on people's financial well-being. It's often a huge part of their income in retirement is coming from the retirement savings. If you get that wrong, it can really have a huge impact on them. So I think while we can, well, in addition to that, especially if we're speaking of retirement income solutions that protect against longevity risk, if you're defaulting into something that you can't get out of, people can't suddenly opt out. So it's a one-time decision, you're in or you're out, and if that's the wrong decision for them, it can be very dangerous.
Okay, thank you. And Alan, your thoughts on that point?
Yeah, Chris, remember I'm talking here about pensions and not about savings in general. A pension scheme is intended to provide financial security in later life, and therefore during the build-up phase, I'm very comfortable with defaults providing cost-effective access to diverse asset classes at the lowest possible cost, because if people have other needs to meet, those needs will be met through a vehicle other than the pension scheme. As we move towards maturity, however, I think we have to home in on the needs of the individual. The needs of the individual, both within the pension scheme and between the pension scheme assets and other assets that they might have garnered along life's way. So I think that a well-designed default is really good for the build-up phase, wherever you are on the income spectrum and wherever you are on the social spectrum. We all need reasonable growth at a reasonable cost. Then when it comes to later life, I think that the use of a default has passed its sell-by date, and we have to help people arrange their assets in a way that meet their wants and their needs. Do they want front-end loading, back-end loading? Do they want guarantees? We can then, when they've got some wealth under their belt, they can take advantage of financial wellness counselling and tools to fine-tune their access to that wealth, so that hopefully they can enjoy retirement and not simply endure old age.
Okay, thank you. Next question is for Stephanie, but before I do, just a reminder to the audience, if you do have any questions, please put them through the Q&A or through the web chat, I should say, or if you're brave enough, raise your hand and we can put you on screen. But Stephanie, what else are you working on at the moment?
Well, thank you, Chris. And actually, there is one project that we're working on at the moment, which can resonate quite strongly with the audience today, because we're working on a project on the role of employers to support retirement savings. And the reason we are doing that is that the use of employers to support retirement savings is quite different across different countries. You have countries who rely heavily on employers where they have to set up a plan, make contribution, and is mandatory for all employers. In the middle, you have systems where it's voluntary for employers to set up a pension plan. So it's the decision of the employer to do it, to contribute to the pension plan of their employees. And to the other extreme, you have countries that don't rely at all on employers to provide for retirement, where everything is done directly between the employee and the financial institution. And the employer is just here to collect the contribution and channel that to the provider. So you have a whole range of roles for the employers, and we want to understand those different roles and also understand the advantages and disadvantages of using employers to support retirement savings. Some of the advantages, for example, are, well, it's very easy because You have payroll deductions. So that's pretty handy. The employees don't have to think about it. The money is taken directly and saved into their retirement savings pots. But one disadvantage could be that you need this employer-employee relationship, and all those self-employed or all those new ways of working that have a much looser relationship between the employer and the employee, then they are left out of the system. So we want to understand all these mechanisms and try to provide some policy recommendations for countries who are considering ways to increase the role of retirement savings in all retirement income arrangements, but don't know yet how to involve employers and in which way. So this is where we are looking.
Yeah, I mean, if I can just add perhaps one reflection on that, again, putting my hat on as previously an in-house pensions person, I think the role of the employer is crucial in this, and the employer should not distance themselves away from this. Well, certainly should not completely distance themselves away from this. If you ask any employee, you know, what type of pension scheme are you in? I'm in my company's pension scheme. I'm in my employer's pension scheme. That will be the general reaction. So yeah, I think the employer has a huge role to play in all of this. Pablo, if I can come to you now, please. What's your experience of working with the UK regulators and policymakers?
Well, we work with the 38 countries and a few more, and of course the UK is a UK regulators and supervisors are an important component of our working party and our committee, and we always found the relationship very fluid, and also we find them very open to explain the issues and to take experiences. So they are willing and full participant in this exchange of ideas and experiences that is so important for us, the OECD, to provide policy guidelines. So our experience with policy, with pensions and insurance regulators and supervisors in the UK is quite good, and we learn a lot from them.
Alan, if I could possibly put you on the spot on this, you've worked within the UK pension systems for many years. You've been the author of a report that, in my mind, should have been implemented, or many of the recommendations should be implemented. You still have those ongoing discussions with regulators and policymakers. What's your view of how they're acting?
I think that the complexity with which we have to live is the unintended consequence of well-intentioned intervention. Policy is far too often made by looking in the rearview mirror rather than in the windscreen, and we produce a solution to yesterday's problem that becomes tomorrow's crisis. The solution is often worse than the problem it was intended to solve. And complexity has resulted from this constant political meddling. We really do need a pension system that stands the test of time, and it needs to be based on 4 pillars, really: diversity, inclusiveness, simplicity, and perhaps above all, stability. How can people plan if the rules keep changing? I'm a big fan of the pensions regulator because the report to which you refer that I wrote gave birth to a risk-based and proportionate regulator. I think we have to keep reminding them that we want a risk-based and proportionate regulator. It must be quite difficult if you're a regulator and you go home to tea and the children say, "What did you do at work today, Dad or Mum?" And he said, "Not a lot, because I'm proportionate." you soon lose tea table credibility. But we do need a regulator which supports, helps and improves member outcomes. And I think they are well on the way to doing that. But every time the politicians look in the rearview mirror, they say, let's get the regulator to solve yesterday's problem. And it just creates a myriad of rules and regulations which become the fodder of risk registers themselves. So yes, well-intentioned, but sadly, the road paved with well intentions produces many, many unintended consequences.
Okay. Question for the audience, or from the audience, for Stephanie, if I may. What are the main issues that you have faced with respect to collecting data? How have you worked around that?
So at the OECD, we have two streams, let's say, with regard to data. So as Pablo mentioned, we have this publication, an annual publication with data about pension funds, assets, contribution levels, asset allocation, members, and so on. And this is aggregated data at the level of each country. And we collect that data from regulators and supervisors. So here the challenge is not so much access to data, it's more harmonization of data. So we have done a lot of work to work with the countries in the first steps when we developed this exercise to have common definitions, so that when we receive the data, we know that they are really comparable, and we do a lot of checks, and obviously. So this is one aspect of data gathering, and this is not so much of an issue, although a lot of work behind it. But the second part is having access to microdata, so individual level information data, or data at the level of the pension fund. And this is where you can really start playing around and understanding the needs of different people, the characteristics of the members, and this is why we are so happy to have this joint relationship, joint research with Standard Life. And in the past, we have tried to use survey data, and I think we only managed to get something like 8 OECD countries in the group because we needed access to survey data, and it's very difficult to have access to those. And it's also difficult to have access to surveys that collect the information that you need. Here we need something very specific. We need something that is about the views about retirement, about the use of different savings vehicles. So as we were saying about financial awareness, it's not only about private pension arrangement, but it's also about other savings that people may have, their housing wealth, and so on. So having access to this wealth of data for many individuals is quite challenging.
Okay. Another question from the audience, and I think I'm put Gao and then possibly Emma on the spot from this afterwards. With respect to diversity, equity and inclusion, we know that a significant part of that is how a person feels, and more importantly, who is providing the information. Have you been able to collect data that you've mentioned from Standard Life with respect to those subjective but perhaps critical issues?
Yeah, I mean, I think I'd said we use internal data that we get from the employer, and that generally will cover, and we match that with external data. So we can generally, we'll get things like gender, but also we can, in terms of where people live, we can make assumptions about their socioeconomic status and what their challenges might be. We then use research data to sort of augment that, and that's why this partnership is really key for us, because we'll use that data. We don't get the full breadth of diversity data, but as I say, that's where we use external data. But we also do things like work with behavioural psychologists as well, to try and make sure that we're talking to people in a relevant and clear way. So we tend to bring together multiple sources of data, but I think our ambition is to widen that so that we can really get much more granular in that personalisation.
Emma, perhaps anything to add to that?
A couple of things to add. So I thought it was interesting earlier, Chris, when you said a 6-year-old should be able to understand it. And in fact, the recommendation is a 7-year-old, so you're a year out.
Apologies, I stand correct.
We work really hard on our communications in partnership with people like Cowrie in Plain English to make sure that our communications are easy and simple to understand. The other thing I think that's worth mentioning, Gail, is our vulnerable customer programme. So particularly post-pandemic, we have seen an incredibly sharp rise in the number of customers who would identify themselves as having some sort of vulnerability. And that could be physical, mental, financial, really diverse needs. And we've got an incredible programme within our operations, our service area, that really allows us to identify those customers and give them specific and targeted help as well. We're very proud of it, and we get some fantastic feedback. So that's just another way where we're starting to think about how we use that data to build better solutions for the future.
Okay, thank you for that. There's no more questions coming through from the audience, so perhaps if I could pass back to Alan for him to do his bookmark, closing statement, if I may.
Yeah, so here I am again, Alan, with the second half of the human bookend. To those who regard the fact that we live in a woke society, I don't know what a woke society is, criticise the existence of a woke society, would say that D, E and I are but one more irritating three-letter acronym. To me, they aren't that at all. What D, E and I means to me is that whatever compartment you are born into, whatever compartment you move into or are moved into, you should be able to fulfill your potential. Fulfill your potential occupationally, socially, and financially. And hopefully the work that we've been discussing today will help us along that road. You, our audience, have been engaged today. Hopefully you will be engaged further with the research project. But those of you who are employers need to be engaged with your workforce in helping them identify their wants, their needs, and then value the extent to which you are helping them meet those needs. Even though you outsource a number of technical, financial functions, you shouldn't outsource your engagement with your employees. If you want those employees to fulfill their occupational potential while working for you, please, please engage with them. Thank you for engaging with us. I've enjoyed the last hour. I hope you've enjoyed the last hour, and hope that you, I, and all of us enjoy the remainder of today. Thank you very much.